It's time for Real Estate 101 with the Karey Brown team from Realty Executives Preferred Advisors.
Good Sunday morning to you. This is Karey Brown, broker owner of Realty Executives Preferred Advisors, and you're listening to Real Estate 101. Today I am here with Jim Garrison. Good morning, Jim.
Hey, good morning, Karey. How are you?
Good. So Jim is from State Farm, and he is going to be going through all the things that you need to know about homeowners insurance and flood insurance and rental insurance and all those good things that have anything to do with what you're living in. So let's just start off with some of the consumers' questions. First one would be, how much would it cost to rebuild my home in its current condition and location in the event of a tornado or something along those lines? How do you guys calculate that information?
Karey, that's a really good question. We start with information from the MLS, and if the home is located in Shawnee County, we'd go out to the Shawnee County Appraiser's website and learn the different attributes of the home, including number of bedrooms, number of bathrooms, size of some of the rooms, size of the family room or the kitchen, and some of the attributes that go with each of those rooms. And then we make contact with the potential buyer and say, hey, here's what our expected replacement cost is, but we really feel that it would, with today's price for materials and the labor expense, here's what we feel it would cost to rebuild this house. And then we get their opinion on that, and then we move forward to try to find a suitable solution to make sure they have the very best coverage possible, but make sure that we keep the premium dollars as low as we can, make sure that we obviously give them good coverage for both the house itself and their personal property.
So the next question was, how should they insure for their personal property for both a homeowner and then again for a rental for renters?
Well, first I'm going to address that as a homeowner, as what we call a non-tenant homeowner. It's occupied by the owner of the home, obviously. We've got very good coverage under the terms of the homeowner's policy itself. It would be subject to the deductible, and many times people look at a 1% deductible on their homeowners. So with a $100,000 house value, the deductible would be $1,000, or a $200,000 house with a 1% deductible, of course, would be $2,000. So there's good coverage with some limitations. Usually there's some limitations on goldware and silverware. There's limitations on the amount of coverage for guns and limitations for the amount of coverage on jewelry and other precious items. So if a homeowner has some of those items and they want to specifically cover that on a named basis, then we have a policy called a personal articles policy that can easily cover those items for the appraised value. So that's oftentimes a conversation we have with a homeowner that maybe they have a very nice diamond ring that they have from engagement or marriage, or if they have some specialty collections that they keep at their home, then we'll talk to them about what's called a personal articles policy. And that very same personal articles policy is also available to people that rent their home. They rent where they live. And a renter's policy can give them coverage at a very low amount as far as premium, and give them very affordable coverage for the other personal property too. So sometimes we've got personal property coverage for renters in the neighborhood of $20,000 or $30,000 or $40,000. And sometimes if they have a laptop computer or a special piece of jewelry, we'll also add the personal articles policy to give them very good coverage on those particular items.
The next question was, how much liability insurance do I need?
We usually recommend at least $300,000, and depending on the household situation, we'll look at other liability limits up to $500,000 or $1 million. And to give them the very best coverage, we'll look at a different policy that gives them what we call excess liability above and beyond the policy limits. And that policy is called a personal liability umbrella.
Explain the cost of living expense coverage. So my understanding is, and I don't know much about it at all, but basically it's money that covers you in the event that you have, say, like a flood or a tornado or something, and you have to live in a different place until you can move back in, the home's rebuilt?
That's exactly right, and that could be a really, really important part of that policy. Let's say we have another terrible tornado that comes through Shawnee County, and there's a shortage of materials and a shortage of contractors to get homes rebuilt, and instead of maybe 6 or 8 months to get that home rebuilt, it takes 20 or 24 months. Many policies in the marketplace today, they offer that coverage, but sometimes only up to a set dollar amount, like $30,000 or $40,000, or maybe for 1 year. Our State Farm policy offers that loss of use to make sure those additional living expenses can be covered for a full 24 months, a full 2 years. So that gives people the comfort and peace of mind if that rebuild process really does take a long time, which certainly can happen. And we've had those occurrences. They've got the peace of mind to know that $100 or $120 a night type of hotel bill, plus their extra restaurant bills, will be covered and covered well. And we'd hate to be rebuilding a house and all of a sudden they hit the limit on a loss of use policy and all those expenses started coming out of pocket for homeowners. That can make for a really tough situation. So that's why at State Farm we talk about our loss of use provision a bunch, because it's helped out several clients that have gone more than 12 months to get their home rebuilt.
Wow. So qualifying for discounts. I know whenever we sell a house, we mentioned, talking to your insurance agent, if you have all of it in one place. A lot of times people don't understand they may have their car insurance in one place and, boat insurance somewhere else, and they don't realize that the discount potential of having it all in one place.
Some of the biggest discounts that we offer for homeowners would include, just like you said, particularly having the vehicles, a couple of vehicles with your homeowners. Another one that's very significant is for impact-resistant roofing. So if they have shingles that are thicker and heavier and UL rated Class 4, we have a list that's updated monthly on statefarm.com, but that can give homeowners up to a 26% discount on their homeowners, so very significant savings if they have those thicker, heavier shingles. Other discounts that are available, if, like you said, you have homeowners and other things together, when you have auto, homeowners, and a liability umbrella, that's another discount that's available too. So Home Alert helps quite a bit, and our premiums are very reasonable for newer homes as well, so that can make a difference.
So if you live in the proximity to like a fire hydrant, does that help at all?
Many policies it does with other companies, and we used to use that metric within 1 mile or 5 miles, and now State Farm uses within the city limits. Obviously makes a difference, but we have some really good rural rates in some areas where they've got an extraordinary rural fire department too. So we don't really, that's not part of our application process anymore, but geographically we know that fire protection is very important, so that is a factor in that rating.
One of the other questions was, should I buy separate flood insurance and earthquake insurance?
To answer that question, when it comes to flood insurance, it really depends oftentimes on the flood map, the floodplain, and also, quite frankly, what your lender comes down to and what their thoughts are. Flood insurance has become more expensive, particularly as some remapping has occurred. So usually that's driven by the lender, by the mortgage company when it comes to flood insurance. Certainly one thing that you want to take a look at before you make an offer on a home to understand if it is in a floodplain or not. Changing gears to earthquake coverage, I've had many homeowners that have inquired about earthquake coverage, particularly with the higher frequency of earthquakes to the south of us in Oklahoma and a few rumblings in south central Kansas as well. And some people realize, and it's not common knowledge, but there is a fault line to the north of us, and there's a fault line that runs very close to Tuttle Creek Dam. So many people are taking a strong look at earthquake, and usually for $70 or $80 annually, they can have the peace of mind that they do have earthquake coverage. So I've got more and more clients that inquire about that, and I think it's something worthy for the homeowner to at least discuss with their spouse and with others in their neighborhood. So I do support earthquake coverage, and I have many more clients now that have earthquake coverage as opposed to 6 or 7 years ago.
Is there, I know more and more ACs are getting stolen, so if your air conditioner were to get stolen, is that something that you should file as a homeowner on your insurance claim? It
really comes down to if the entire unit has been taken or just the copper tubing and the wires. Once in a while, the thieves they don't have the full time to steal the whole unit, so they just end up taking copper tubing and the wiring. So it really comes down to a question of how much is it going to cost to replace those items by a qualified HVAC contractor versus what a person's deductible is. So back to if a homeowner has coverage on the house for $100,000 and their deductible is $1,000, they'd really want to talk to their HVAC professional and see what's it going to cost to repair this, what's it going to cost to replace it if the entire outside condenser unit has been stolen or damaged beyond repair. So it really comes down to a question of what's my deductible and what's it going to cost to fix it. So if a $1,000 deductible is in place and the cost to repair and or replace is $800, then that would be something the homeowner would want to take care of as an out-of-pocket expense, and try to do something, whether it's outdoor lighting or whatever else it might be, to make sure that thieves don't try it again.
What would you say is your biggest insurance claim in Kansas?
The average homeowner in Kansas files a claim about every 8 or 9 years, is my understanding, Karey, and oftentimes, more than 50% of the time, as we can relate to this spring, it's related to hail or high winds. Oftentimes, the hail or the high wind will damage the roof, damage window frames, the siding itself, can beat in the fins of that same air conditioner unit we were just talking about. So hail and wind causes the most, it's the biggest peril that we cover. And we had the biggest one that we had recently was back in 2011, but State Farm paid out millions of dollars to homeowners in Shawnee County, Kansas, due to high winds and particularly because of the hail. One thing that people can do to help protect themselves against that is when they do install a new roof, they put on new shingles, they really might want to consider impact-resistant shingles. They're thicker and heavier and allow the homeowner to have more peace of mind that may not have to replace their roof after a major hailstorm if they have these UL4 heavier shingles in place. And unfortunately, State Farm realizes that and rewards those homeowners with a 26% discount for having the impact-resistant shingles in place on their home.
That helps to certainly pay off, doesn't it?
Heck yeah. A lot of times we'll have people call and inquire about that. And even though those shingles are a little more expensive, usually their return on investment, because they get a lower homeowner's premium, they can pay for those thicker shingles in 4 or 5 years. So a lot of people like that idea, and particularly I spoke with a homeowner yesterday, and he says, I'd be really okay if I don't have to replace my shingles again. And he's in his 60s, and he's retired, and he may sell his home sometime in the next 15 or 20 years. So the idea of impact-resistant shingles really appealed to that particular client.
So another question that they posted was, what if I get water in my basement from a natural occurrence? Is that something that insurance would cover?
If it's caused because of a backup of a sewer or backup of a drain, there's endorsements to take care of that. If it's surface water that comes in through a crack or if it comes in through other sources, oftentimes that's not a covered peril. So it can cause some questions to be asked, and our claims people certainly do that. But we always do recommend, for that reason, that people do have the backup of sewer and drain endorsement on their homeowner's policy. And the backup of sewer and drain endorsement will cover not only carpet and pad, but you can also, down in the basement, make sure there's coverage for personal property due to backup of sewer and drain. So that's an endorsement very, very worthy of asking about and understanding when they go to look for homeowners coverage.
So we were discussing how homeowners can get discounts by having insurance all in one place. So let's just touch real quick on the other services that you offer besides homeowners insurance and what all they could bundle into one place.
You bet. Oftentimes, Karey, we'll see homeowners also have a couple or 3 vehicles. So we do pickup trucks and automobiles and commercial vehicles as well, and motorcycles. Sometimes those side-by-side utility vehicles, so we'll get those covered to help people out. Individual wave runners and individual watercraft boats, and we help with other commercial things too. So if there's some independent small business owners out there, we've helped restaurant owners and different retail owners with their commercial insurance, including workers' compensation as well. We try to help people all encompassing to make sure that the main reason they're basically we offer life insurance and disability to make sure that they continue with their same way of life if something happens to them. So we feel that life insurance and disability, particularly for the first-time home buyer, that's a pretty important conversation. Sometimes we'll call that the triangle of protection, but if somebody becomes disabled, that risk for a young 30-year-old male is about 1 in 3 that they'll become disabled and not be able to work for some 90 days or longer. And, of course, unfortunately, all of us know people have passed away prematurely and the hardship that can cause to a household, particularly with a mortgage. So we talk a lot about life insurance, and it can be very affordable. There's some notions out there that life insurance can be sort of pricey and too expensive, but there's good term products out there that can make sure you have a level premium for 20 or 30 years and make sure that mortgage is taken care of if something tragic happens to one of the breadwinners. We help with other products as well. So State Farm offers a little over 90 different products for personal use and commercial use. So we'd love to have those conversations as people see fit. We're open on Saturdays at my agency too, and I know some other State Farm agents are as well. So we understand customer service when people may not have the time Monday through Friday. We want to try to be available for folks to come in and talk to us, or at least get a hold of us on the phone.
I am here with Jim Garrison of State Farm, and we were talking about different things that affect homeowners, and now we're going to talk a little bit about flood insurance. So, Jim, tell me, what does flood insurance cover?
Karey, that's a heck of a good question, and it's one that I have many clients ask me the very same thing. So I'm gonna review just a couple of things. First, I'll talk about the definition of flood, because flood means a lot of different things to different people. So officially, by the National Flood Insurance Program, they define that as water, a temporary coverage of water over 2 or more acres of land, which, when we think about it, it's quite a bit of land, or over 2 adjacent properties. So in town, usually that definition would be more defined by 2 adjacent properties. So that's defined as a flood. And usually that's a rising water out of a creek, like we saw a few years back at the Shunga Creek. So just as a point of reference, that's what flood would mean to the federal government anyway. And then we've had 2 things that have occurred here in the last 5 or 6 years. The first would be some legislation that went through Congress, and their goal was the flood insurance program, just to give you a little background, had basically been losing a lot of money for the federal government. And back in 2011, the bill was passed called Biggert Waters Flood Insurance Reform Act, and that goes back to 2012. And their goal was to make it premium neutral, meaning that enough premium was collected to make sure that the plan could sustain itself and didn't have to be propped up and supported by taxpayers and by the federal government. So that was passed and went into force. And basically it states, and they call it BW12 for short, it just says that, hey, these subsidized insurance ratings, which several of them in what we call a high-risk floodplain, many of those premiums were subsidized by the federal government. So after the passing of that Biggert Waters Flood Insurance Reform Act, the whole goal was to gradually get those premiums up. Well, their definition of gradually included some increases of up to 25%. So we're seeing that in several what we call high-risk floodplains, which would be like an A floodplain. It would be considered a high zone. And several times it's not just 1 year, 25% increase, but it could be a second or maybe even a third year of an increase, sort of sizable. And like I said, the whole plan there by the federal government is to try to get that. So they collect enough premium to pay out all the claims that they have when floods do occur. That being said, there's also a lower risk plain that's not as frequently flooded, and that's called a moderate to low risk area. And those you would usually see the letters in the floodplain with a B as in boy, a C as in Charlie, or an X. And we're not seeing quite the increases in those type of floodplains, the moderate or low risk area. Areas along the Shunga would be in that high risk area, which would see the floodplain, that zone would be an A as in apple or V as in Victor. And another place that we've seen increases in flood insurance has been with non-owner occupied. So investment properties that's not occupied by the owner, we've seen some increases there. And to get directly to your question there, Karey, what's covered by flood insurance comes down to the definition of where the floodplain is and where the living floor, where the floor is elevation-wise in that house. So really, it comes down, does that house have a basement? And if so, is it a walkout type of basement, or is it just a slab house that does not have a basement? It's pretty easy when it's a slab house. It's easy to understand where that elevation is. With a house with a basement, it comes down to how do you get to that basement? Is it a walkout basement, and truly a walkout basement where you can go out the basement door and go straight out to ground level, or do you have to go up a couple of 3 steps? So if you have to go up a couple of 3 steps, by definition, the part that's covered by flood insurance is actually the floor above that, or what we would call the first floor of the house. And flood insurance covers the structure, and it has a second part that can cover personal property. But it's 2 separate parts of that flood insurance program. And usually what lenders are most concerned about, of course, is covering the structure and making sure that their interest is satisfied if there would be a flood. But a homeowner can also choose to put in coverage for their personal property. And there's a deductible for each. So if a homeowner has coverage for both the structure and for personal property, they can be subject to 2 deductibles of $500 or maybe even $1,000 each.
So whenever it comes to A zones that are, say, near Shunga Creek, we saw an instance here recently where they said, if the house should flood again, we're not covering it, or we won't cover it, so rebuild it. How does that, is it just in certain zones that it's that way? And how would the homeowner be compensated if that were the case?
It is in very limited zones, as I understand that program, and that's a good question that would have to be addressed to the National Flood Insurance Program. Because the National Flood Insurance Program is the administrator for the program. We as local agents get those policies placed, but at the end of the day, the ultimate word when it comes to if there's a payout, how's that situation can be adjusted, really comes down to the hands of the federal government. But there is selected areas, and it's usually not more close to what I would say major rivers, like the Missouri River and the Mississippi River. But yes, like you mentioned, there's been selected areas that have in the past had a high tendency of flooding, and consequently the NFIP is saying we're just going to withdraw from even placing any coverage there in the future. And it's a very unfortunate situation. But the National Flood Insurance Program, they're trying to meet the terms of this act that was passed back in 2012, that Big Waters Act, and they're trying to make it premium neutral, meaning that they've got enough money collected from premiums to make sure all the claims can be covered. And if there's multiple claims from the same address in a relatively short period of time, unfortunately, they make those decisions to no longer offer coverage.
I know also, and I didn't necessarily prepare you for this question, so you can say you don't know off the top of your head, but like sewer waters that back up, say, for instance, there was a period there that the city sewer backed up into people's basements. How is that classified? Is flood insurance, does that cover that at all, or homeowners insurance?
That's more covered by endorsement on the homeowners insurance. And I know, at least with my company, with State Farm, that's covered through an endorsement called backup of sewer and drain. And there's 3 different levels. You can get a basic level of coverage, a mid-level coverage, or a very good level of coverage. So that's entirely at the discretion of the homeowners. But yeah, to answer your question, flood insurance really wouldn't be applicable with a backup of sewer into the basement of the home.
Okay. And even if the water table is what they feel like caused that?
That's still a true statement. The water comes from the pipes and it comes up through a drain. So yeah, flood has to be surface water. It's water that, and it has to cover a number of lots too. Like I said, a couple of lots or even a couple of acres. So
gotcha.
Yeah, that's more of a situation where your homeowner's insurance would come into play. And regardless of who a homeowner has their insurance with, they really ought to take the time to sit down every couple of years with their insurance agent and understand if they, first of all, have backup of sewer and drain, and second of all, if there's different options that they might explore for their own situation, their own home.
Makes perfect sense. I know we've been asked that a lot, and there's your answer. So when it comes to, say, for instance, air conditioners being stolen, is there a difference, number one, if someone's living there versus if it's a vacant property? And how does having a vacant property affect your insurance?
There's a couple different factors there. One would be if it's a vacant property, and the other would be is it owner-occupied or is it an investment property? And in any situation, the theft of that unit, that outdoor unit, the condenser unit as they call it, is subject to the deductible. So whether you have a $1,000 homeowner deductible or say 1% of a $2,000 or $200,000 home and you have a $2,000 deductible, any loss of that unit or the copper and wiring and tubing is subject to that deductible. So I've seen a lot of homeowners, they take a couple of different means to try to secure that unit themselves, either physically by putting a cage over it or making it very difficult to get to that unit, or if they have a home security system, there's some of the more major companies that can put a device in place that will alert you if those wires, if the power going out to that unit are cut. So that's another way to address that. And thirdly, I've seen other homeowners they'll put a video camera out there. They'll put one of those video cameras that maybe Nest or some of the other manufacturers make now that you can look at directly on your handheld smartphone, or it definitely just goes over the internet, so you can watch it directly if you choose to. So a couple different ways to try to prevent that. The good news is, quite frankly, the cost of copper, the value of copper has gone down recently, so we're not seeing quite as much of that type of theft as we did, say, 3-4 years ago.
Which is great. Also, in case you missed the show with the Topeka Police Department, you can get someone to frequently patrol your area. If you have, like, say, for instance, you're on vacation or the house is vacant and someone's messing around, and it's free to you. You have to fill out a form. So call the police department. Don't call 911. Just call the police department. Fill out that form, and they will make more frequent stops by your house. So
that is great to hear, Karey. I sure wasn't aware of that program at all.
I wasn't either until she came on the show, so I learn something new every time.
That is super cool. And yeah, you're right. It's theft overall, whether it's a bicycle or motorcycle or the air conditioner unit in the back. It's very frustrating. And once in a while, and quite often, frankly, it's an item that may not be quite the same value as their deductible. So it's really important for the homeowner to close their garage door, even if they're just going inside for a few minutes, and keep stuff inside that garage. Don't keep the motorcycle and stuff for the golf clubs. We hear stories of golf clubs getting stolen all the time, unfortunately. So try the very best to secure those items, not just necessarily inside your car where people can still see them, but in the garage, or better yet, in the basement. So it's not visible from the streets. We see more often than not that once in a while thieves just walk into a garage and take what they want, and 2 minutes later they're gone, even in the middle of the day sometimes.
Yeah, check your mail very often too, because people do that also. Steal the mail.
Yeah, that is so true.
Okay, last one. Earthquake insurance. Not that we have a big influx of that around here, but say, for instance, if it should happen, what kind of rider should people be looking at?
Earthquake coverage is by endorsement on most major homeowners coverage, and there is a fault line to the north of us. The Corps of Engineers did some major repairs and major upgrades to the Tuttle Creek Dam recently, and one of the reasons was because of that fault line. And then, of course, we all hear about the earthquakes in Oklahoma due to whatever. I mean, it's debatable what's causing it, but it's undoubtedly at a higher frequency, and a lot more of them happening in south central Kansas and the northern part of Oklahoma. So with our particular endorsement, you can pick your deductible, and it doesn't add too much annual premium. So to add a 2% deductible and have earthquake coverage, it's somewhere in the range of $70 to $100 a year. So it's a very personal question, and some people say, "Oh, I don't need that," and others say, with what I'm hearing on the radio and seeing on TV down around Wichita and to the south and west of Wichita, I've had a lot of inquiries and a lot of people adding earthquake insurance. So it's like I said, definitely a personal question. Some people just don't want it at all, and others are very interested in it. So it's available by endorsement on any major homeowner's policy.
So is it the same thing as flood insurance? So you have stages of what it covers?
It's earthquakes. It's pretty simplistic, actually. You just pick your deductible, and it's going to give you good coverage for the structure itself. Whereas flood insurance, you can choose many of those variables, including the deductible, and probably the major component of flood insurance. The homeowner can choose if they want to cover their personal property or not. Usually, a mortgage company is only interested in covering the structure, so it's up to the homeowner to decide if they want not only structure coverage but personal property coverage too on that flood insurance. But earthquake insurance doesn't have near the moving parts, and it's just simply an endorsement on your existing homeowner's policy. It's not a separate policy like flood insurance. It's definitely a separate policy.
So I think the key thing to catch there is whenever people are getting a mortgage, that flood insurance is oftentimes something not necessarily factored in. So that kind of hits you by surprise. So you're thinking, okay, well, I have flood insurance because I'm required to, but that really only covers the structure of the house. So you need to get the rider for the interior. Is that correct?
If a homeowner wants to make sure that their stuff, their personal property, is covered inside that house because of the flood, it is their responsibility to go ahead and add that to the same flood insurance policy. So there's two different. I mean, you've got definitely the dwelling coverage, but entirely optional and up entirely to the homeowner if they want personal property coverage on that same flood policy.
And will that cover, say, for instance, your basement? Should that take on water like carpet and sheetrock, or is that just from the main floor up and their personal possessions?
Really, the best coverage is from the main floor up. There's some limited coverage for the air handling units, the water heater, and 2 or 3 other components that are in the basement. But by and large, quite frankly, it's not very good coverage. If it's a basement where you have to take a step up at all to get out, if you can walk clearly straight out and there's no step whatsoever, then they can consider that the basement floor to be the ground floor and extend better coverage. But it's very limited. We don't see that very often at all.
Well, thanks so much for being here today, Jim. Can you tell everybody how to get a hold of you if they are looking for a quote for insurance?
Oh, by all means. On the website, it's www.jimgarrison.biz, JimGarrison.biz, or our phone number here in Topeka, 785-272-0332.
And if you're looking to buy or sell a house, be sure and give us a call. Realty Executives, our phone number is 785-213-5188. And this is Karey Brown, broker-owner. Thanks so much for joining us.
Thank you for listening to Real Estate 101 with the Karey Brown team from Realty Executives Preferred Advisors. Tune in again next Sunday at 11 o'clock for Real Estate 101.